You may have heard about the bucket system for retirement. That's where people put a certain amount of investments into one type of bucket or account, or at least think of it as a particular bucket, and then another type of investment into another bucket, and then yet another bucket. They're all different variations on the bucket system for paying for your lifestyle when you're retired. In this video, I'm going to share with you my bucket system that we have found that works really, really well. We're going to pretend like these are buckets and not cups, and I'm going to show you what we put in our buckets. Hi, I'm Camille Gaines here, and on my website, retirecertain.com, I write about and I talk about investing and about money related things and retirement related things, because all of that is super, super important. I'm not trying to sell wealth management services to you. I just like investing. I've seen how important it is to be able to, well, pay our bills and also to be able to live the life that we want. So if this interests you, subscribe to my channel if you find that you like my content. All right, so let's get back to those buckets. All right, so bucket number one. Now, I'm just going to go ahead and preface this and maybe supersede or maybe avoid some bad comments down below about how the way I invest and the way I approach investment and even retirement and life is different from most people my age. You may be able to guess that because, well, look at my age and I'm sitting here talking about investing. But also, I enjoy the mental stimulation of doing different types of things that generate income. I think it's pretty fun and entertaining. And so what I do here may be a little different from what you do here. So it will be, I can almost promise you, but I'm going to show you my bucket system because it's probably going to be really different from other bucket systems that you see in traditional or typical YouTube channels here. All right, so let's get back to this first bucket. I wanted to clarify that first. Okay, so the very first bucket is like most people that have a bucket system, and that's going to be very, very liquid assets, cash, or money market account. And, you know, we like to keep a couple of years in here, although that's decreasing, and believe it or not, instead of increasing. And I'll tell you why when we get over to bucket 3, over to these other buckets. But everybody wants to keep money that will not fluctuate in value in this first bucket. They want this to be money that will be there regardless of what happens in the financial markets, so that they can pay their bills. And financial experts go back and forth, as to how many months you should have in here. It's really quite comical that after the 2000s decade, when there were all the 3 bear markets in the 2000s decade, all the financial experts were saying you should have maybe 3 years in here. And then after strong bull markets, when assets are actually riskier because they've gotten really, really expensive, then the bucket recommendation usually comes down to 1 to 2 years, sometimes even a little bit less. Now, of course, there's so many factors in how much money you should have in this bucket, but you've got to figure out what works for you and what you're comfortable with and what helps you sleep at night. For us, we like to have at least a couple of years in this bucket. Now, I'm going to say that this bucket will increase depending on what's happening in the economy and the financial markets. That's because the value of our assets rise and fall. Our investments, our net worth, it all rises and falls based on what's happening in the economy. And so the value of this bucket will increase or decrease depending on what's going on. Like if everything else is overvalued, then we'll have a little bit more, maybe significantly more in here because, well, everything else is overvalued. Even Warren Buffett does this strategy, even though he tells us all to just buy the S&P 500 or do something similar for years and not do anything else. We see, if we look at Berkshire Hathaway, he increases his level of cash when assets become over value. All right, so that's bucket number 1. I know most people just say, well, I keep my money market account in here for 1 year. I got to go and do a little more detail than that, right? Because I'm a little bit different, like I said, in my approach. All right, then we've got bucket number 2. What assets are going in here? The assets that go in here are income generating assets. Okay, so here we've got the assets that pay the bills, and that's going to be money market. That's going to be no risk assets in here. Here we've got assets that might go up and down in value, probably not so much though, but they generate income. So for us, that is residential real estate rentals that we own, online business of various types of online businesses, and you may have seen my other video where I recently purchased an online business because of the income that it pays relative to the amount of capital that's required. I love assets that don't require much capital, but that generate a nice amount of income. And the only place I was finding this a few months ago was in online properties, online websites. So I purchased one, and I'll have to do an update on how that's gone, but it's been pretty good. It had a very, very low PE ratio of about 3, and it generates a profit every month, and it doesn't require much work, and it's a topic I love, so it's been a lot of fun. Anyway, this bucket here has those assets in it. Those are assets that generate income to pay the bills, and that's what we keep in here. So that's number 2. Now, traditionally, most other bucket approaches that you're going to see, they're going to have in here assets that don't fluctuate in value a whole lot, that they have a little bit more risk than this bucket where we have our cash, but not as much risk as this bucket over here. I look at it completely different. I look at it by function. Pay the bill, have the money, don't go up in value, up and down in value, pay the bills, generate money to pay the bills is in here, number 2. All right, I don't like risk, period, in any of my buckets, really, at this point in my life, and I've learned that. Okay, so then we've got bucket number 3. Bucket number 3 has more traditional assets such as stocks, bonds, but our bucket also has things like commodities and or real estate and other assets besides just stocks and bonds, a little gold sometimes. All right, so this is in the form of ETFs. Why ETFs? Well, because they are very, very low fee. I buy and sell them myself at no commission, and I like them because they're very, very liquid. And knowing that they're very, very liquid, that means I can have more money here working and have less money in here losing value to inflation every single year. And yeah, this is liquid. So to me, that's a big part of the puzzle or a key factor is we've got the fluctuation in value, but we also have the liquidity. These aren't so liquid, but they pay the bills. These are highly, highly liquid, and they may fluctuate in value, but I'm not a buy and hold forever investor. I don't like that anymore because assets go up and down. I experienced the 3 bear markets in the 2000s decade, and I don't like riding out bear markets. So I invest this bucket, this ETF portfolio, based on a system that I found that works really well for me and my goals and the amount of risk that my husband and I want to take on at this point in our lives. So those are my 3 buckets. Let me make sure I've told you everything I wanted to tell you about my buckets. I think that's really it. I've got cash here, to pay the living expenses, and then I've got the income generating assets here, and then here I've got the ETF portfolio, highly, highly liquid not buy and hold forever because I don't like riding out bear markets. And that's what I've got in my buckets. If you like this information, make sure to subscribe to my channel. Thanks for watching. Remember, retire certain.